So how to keep track of your option selling trades, or how to create a spreadsheet to keep track of your option trades. So I do mostly option selling. So I created this spreadsheet for myself just to keep track of my trades. I actually started back, I think in June or July, actually it says here July. Before I used to just go to the Questrade, the report section, download all my activity, and then I would manipulate the spreadsheet to give me what I want. But I find that this way is easier, faster to just track it as soon as I place the trade. I update the spreadsheet, and as soon as I close the trade, I update the spreadsheet. I get the number that I want. I get to see the exact profit that I made. Sometimes manipulating the activity report under Questrade can take some time, and grouping the trades can be a little bit tiring. Finding out which trade you initially opened belongs to which trade that you just sold. So I just want to go through my spreadsheet. It's nothing special. It's pretty simple. It's basically the information that I need. So the columns that I have, I've got open date, so the day that I actually opened the trade. I've got the symbol, of course, what I'm trading. I've got the type of trade. So I've got some hidden columns here. Let me show you here, the hidden columns, unhide. So these are basically the type of trades that I would make when I sell options. So I would do a put spread, call spread, naked call, naked put, a straddle, a strangle, although probably don't do these so often, iron condor or iron butterfly. So the reason I have this listed, I'll get to it. It's because of the number of legs that are in a trade. So let me just go back to the column. So basically these are, in this column, I would put in the type of trade that I'm making. I could also turn it into a drop down if I want, so that I can go choose it instead of typing it. But anyways, whenever I add a line, I just copy paste the previous line, so it's not a big deal. Here, of course, I put the strikes, and here's obviously the price that I'm selling the trade at, the open price. So how much I sold the trade to open the trade. The expiry, of course, is the expiry of the options trade, and closed over here is obviously how much I paid to close the trade. And then the rest are formulas. So once I have the open price and I have the close price, I have my P&L, I have my profit for the trade, and I've got a formula so that it doesn't show anything if the trade is not closed. So if the trade is not closed, so if this column is empty, it's going to show me 0. My P&L is 0 because I didn't close it yet. And then I've got the number of contracts. So that's an input field. I'm going to have to enter how many contracts I actually did. And then total P&L is a formula. Basically multiplies H by I, multiplies this column by this column, my P&L per contract, times the number of contracts that I have, times 100, because a contract represents 100 shares. And then this beautiful line here, commissions. So this is why I have this little table here. Not even a table, just a bunch of cells. So I used this to help me calculate the commission. Now there's, I'm sure, different ways to get this number, but basically based on the type of trade that I'm doing, I'll have this calculated over here, which is another formula. It's basically an if function, but could have been done another way. I could have done a table here, write the number of legs next to it, and then done a VLOOKUP over here. I just happened to do it this way, but there's different ways to do it. I think the VLOOKUP would have been simpler. So basically, if I put a put spread here, it tells me how many legs this put spread has, because a put spread, you're selling a put option and you're buying another put option, so it has 2 legs. Regardless how many contracts you're doing, it has 2 legs. But then if you're doing 2 contracts, so you actually have 4 legs. So that's why the commission uses this column and this column to calculate the number of the amount of commissions paid. So you'll see column I and column L is taken into consideration. And obviously I'm using active trader pricing, so my flat fee is $4.95. And I'm also taking into consideration if I actually let the trade expire worthless, or if I actually paid to close it. So if I paid to close it, then commissions are going to be doubled. In this case, for example, I let it expire worthless, so I put in 0 under the closed column, so it only calculated commission once and not both ways. And then obviously the total column gives me my total net profit. So this is net profit after commissions. And then I basically just separate the weeks by colors. I just change the color every time it's a different week. So for example, let's look at VMware. This is, I collected $1, I opened it for $1. And let's say I were to let it expire worthless, but I doubt I will, but let's say I let it expire worthless, then my net profit would be $93 because my commission would have been the commission I only paid to enter the trade. Let's say I had done 2 contracts, then I simply just put in 2 contracts and I get to see how much I would have made. I would have made $192. And let's say I had closed it for 50 cents. I would have made $84 even if I did 2 contracts. What if I did 1 contract? Would have made $37 because commissions, of course, is higher. It has a higher impact on my profit. If I delete it, then I'm back to 0 here in P&L, but obviously total does show me the commission that I already paid to enter the trades. So I'm already down $6.45 before even closing the trade. That's because the commission I paid to open the trade. So the input fields, pretty simple. Here, let's make it a bit smaller so you can see everything. I'm gonna hide the legs. So I explained the legs. It's a formula just to pick up how many legs are included in that type of trade. So this column here will impact the number of leg columns. So an iron butterfly or an iron condor has 4 legs. A naked put has 1 leg. A naked call has 1 leg, as you can see here. So that's what this column does, but I don't need to see it because it calculates automatically. I'm going to hide it, but it's based on that column that my commission will be calculated. Obviously the number of contracts as well, but this is an input field. I'm going to enter how many contracts I'm doing. And so this column I'm just going to hide. I don't need to see it either. And this column here is basically the sum of my profit, the sum of column M as I started tracking. So I started tracking in July. So you can see that since I started tracking this, since July, I've made a profit. This is confirmed profit of $52.43. And my cash with Questrade should be sitting at $41.71. It isn't right now because I've got open trades. They're not closed yet. This cash will be updated once these trades are closed. And it also helps me see if Questrade, if my cash balance is actually accurate or not in Questrade. So it helps me reconcile the cash balance in Questrade. And I think it's a little bit off. I think it's off by a little bit under, I think $100, but I haven't investigated yet. Now I could probably put subtotals just for fun, just if I want to see how much I've done every week. But simply by highlighting it, I could see how much I did every week. I did have a big losing week actually. I think it was this one here. Yeah, this week I lost $1,100. So if I had a profitable week, let's say this week didn't exist, I would have had almost a little bit over $6,300 since July. I think this week, what does this week look like? This one was a losing week as well, $92, man. This was a big week with $589. This could have been a really good week if I just didn't manage it as much. Okay, I feel like I'm getting off topic. So I just want to show you how to prepare the spreadsheet based on the information that you need. So this is an input column because you're entering the values. This is input column. This is an input column as well. This is input. This is input. This is input as well. So all these are inputs. This one's a formula because it's calculating basically your P&L. This is an input field as well, the number of contracts. I guess I can make this better and put anything that is input. And you know what? I'm going to cut this and put it here. So now everything that's input is right after each other, and then everything else is P&L, is formula, sorry. So this is a formula, this is a formula, this is a formula, and this is a formula. Yeah, I think this makes sense. This makes more sense. So let's say I opened the trade, and let's say I did a put spread or whatever. I basically just copy this field. I basically copy the last field, paste it here, for example, paste it here, and then I'll make updates. I'll change the dates if I have to, change the underline, the symbol. If it's a put spread, it's a put spread, change the strikes, change how much I open the trade for, change the expiry if I have to, and obviously update the number of contracts, and that's it. And you know what, just to make things look better, I'm gonna put the contract column even before the closed column. So we're going to take this column, cut it, and then insert it before the close column. Why? So that the close column is really the last input column. So everything here is input, and then the last column here, this is the last column of input, and then everything else will be calculated. Yeah, I think this makes more sense. Save it. Now, another thing I could add is maybe my percentage of profit. So if, let's say I open a trade for $1, I close it for 20 cents. What is my profit percentage? Now, I don't really care about it because I can easily calculate it. I have like eyeball it. But if this is something you want, we could easily add a column here and basically just say the P&L. So my gross P&L divided by my max profit. But I want this to be a percent. So it shows that I made 80% profit on this trade. Because I collected $1, I paid 20 cents to close it. So I kept 80 cents. So I made 80% of the $1 that I collected initially. Now remember, this is before commission. So if I want to actually calculate my net profit, then I should use this column instead of this column. So instead of using K, so instead of using J, I would use N. Although N is times 100, while this is per contract. So what I have to do is maybe divide this by 100 and then divide it by this, or maybe multiply this by 100. So let's say I choose N instead, and then divided by E, but times 100, and then put parentheses here. So there you go. So now it shows that I actually made a 67%, that I made 67% profit on this trade. I closed the trade at 67% profit, basically is what this means. And it includes commissions as well. And I can copy the formula. Let's say, where do I want to apply it? Let's go with this trade here because I like it. So I made 64% on this put spread for RH after earnings. Let's see how much I made on Adobe. 51%. Okay, not bad. If I want to copy the formula but not change the colors, I basically have to right click and just copy the formula. But now I need to make sure it says percent, it's a percentage, so I just simply click on percentage here, and now it shows me how much of the premium collected do I actually end up keeping. So in the case of this naked put, $1.17, I ended up keeping 43%, which is $50 divided by $117. So you can see actually my percentages are not that good. I want to keep at least 50%, but because of commissions, they end up being very low. Not even 50% that I keep. I just want to make sure. So I kept $50 out of potential 117. Yeah, 42%. Okay. So anyways, I don't like this column. I don't need it, so I'm going to remove it. But I'm just giving you ideas of what you could add to your spreadsheet based on what you need as information. I don't need to know specifically how much percent of my max profit I'm keeping. I could already tell how much it is. And sometimes it's more than 50%, sometimes it's less. So I'm going to delete this column. I think I'm going to leave it as is like this. So input field at the beginning, and this column here being the last input field. I'm going to move this because it's not closed yet. And then these are all formulas. And basically what I want to know is my net profit at the end of the week. Now, another thing I could do is maybe put subtotals at the end of the week, but there's really nothing that separates that. There's nothing that I could tell Excel that this is a different week and this is a different week besides the color. So what I could do is maybe I'll have to do it manually. So sum of this, and then let's see what happens if I copy the formula and just put it here. Let's see if it stops automatically. Now you see it goes from M6 to M10. So it catches this as well when it shouldn't. Let's see if I copy it here. Where does it stop me? So it goes from M14 to M18. Yeah, so it basically it's just taking 4 cells. So I'll have to do it manually. Basically click on auto sum and then highlight the cells that I want included. Click on auto sum, highlight the cells that I want included. Click on auto sum, highlight the cells that I want included. And as you use your own spreadsheet, you'll add things to it based on your needs. As you go, you can improve it as you go. It doesn't have to be perfect when you start off, as long as you know how to use it and it's giving you the information that you need. So now, what's good about tracking your trades, of course, is that you can go back and see which trades have been more successful for you. So you could change your strategy, stick to the ones that do better for you. So by logging my trades, I realized something very important. I realized that I manage my trades too early. I close my put spreads too early. I don't squeeze enough profits out of them. I panic too early. I sell call spreads against them to reduce max loss. And then I end up losing on the call spreads that I sold initially to reduce max loss. So that allows me to stick to put spreads. I do better with put spreads, and just to trust the probabilities, trust the numbers, try to hold on to them a little bit longer. So that's what's really important about keeping track of your trades, is that it allows you to go back and back test and make conclusions, make observations, and improve your trading returns. Like look at this week, I lost $122 on this week, a lot of trades, and ended up losing at the end. The biggest loser here was a SPY put spread. I don't know how I lost $853. Oh yeah, I sold a put spread for 60 cents and then SPY completely dropped. I sold a call spread to mitigate, did not collect enough from the call spread. The call spread was over here, only 59 cents. So that, because of this, I stopped doing the SPY put spreads because I don't collect enough premium to begin with. I only do put spreads 5-point wide if I can collect at least $1. But collecting 60 cents on SPY, because IV is not high on SPY, if anything bad happens, as you can see, I end up losing a lot. $853 just on one trade, and I was doing 2 contracts back then. This one here, $1,100 loss. So this was an earnings trade, really can't do anything about it. This is the risk of earnings. But I realized I'm not going to do an earnings trade where I don't collect enough premiums. And I remember CarMax, I forced this trade. I'd expected move. I wasn't collecting enough, so I kept coming closer and closer to the market price just to collect 80 cents, and the trade completely breached my 95 strike. So this was a complete loser. So This Tesla put spread, for example, that I lost on, well, what I realized is it's actually a call spread. This Tesla call spread that I lost on, what I realized is I sold this call spread to mitigate a put spread, which was this one over here. And if I had just done nothing, my put spread was a winner, and I would not have lost on my call spread. So would have avoided this loss on Tesla, $657, by not managing my put spreads too early. This one I panicked and closed it. Would have been a winner if I did nothing. So this week could have been a $500 profitable week, which I calculated already. But see, I lost $1,100 on this week just by two simple things. Just by not managing too early my put spreads, trusting the probabilities, and not selling call spreads against my put spreads when they get breached. This week would have been a $500 profit week instead of a loss of $1,162. So really, tracking your trades really allows you to see where you could improve and avoid losses in the future. Same thing on this Shopify put spread. It was a put spread initially, got completely breached, sold a call spread, and then it ended up being the put spread would have been a winner if I did not sell that call spread. That's why right now I prefer to roll my put spreads instead of selling call spreads against them. Yeah, this one too, I closed too early, just panicked. Small loss, but could have been a winner. This was a good trade. Tesla put spread, open for $1, closed for 6 cents. These are fun. This one too as well, panicked. This was a profitable trade if I just held it to expiry. I closed it for a $62 loss. Some small changes can really make a big difference to your P&L. This $589 week, this could have been easily over $2,000 week. Once again, just by I closed my put spreads too early, even if they were profitable, I closed them too early. Like $37 could have been easily $80 profit. So another good thing about tracking your trades is that you can go and change the contracts and see what would have happened if you did more contracts. What would have happened if you let them expire worthless. So you could play different scenarios on trades you actually made just to see. So you're basically back testing your own trades and seeing, what if I did this instead, how much I would have done, how much I would have made. So for example, this week I made that specific week I made $589. What if I did 2 contracts on all my trades? Same exact trades, same entries, same exits, but I did 2 contracts. I could back test that easily, and I see that I would have made $1,700 profit instead, just by doing 2 contracts instead of 1 contract. So that's going to make me think, that's going to make me question, maybe I should start doing 2 contracts instead of 1, because commissions are really eating up my 1 contract trades. So my trades are good. They have good entries. They have a good chance of winning. They win most of the time. But if I just scale a little bit higher, I can make a good amount of profit per week. I mean, this is 1 week, $1,700 a week. That pays a lot of bills. And I can also look back, and what if I let this one expire worthless? I would have paid 0 to close it. 0 here, 0 here, 0 here. And I could see that I would have made much, much more if I just let some of these trades expire worthless. All right, so if you have any questions about the spreadsheet, leave them in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, to sell options, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.